Hello, welcome, good morning, good afternoon. Stock market index. We all know about the stock market, but what is an index? Why is it important? Well, in short, if I have to tell you, an index is a bucket of shares. Certain shares which qualify or which meet a certain criteria, they qualify and they are pulled into a basket. And this basket consists of those shares which qualify to be in the basket. They form a basket of shares. And the entire movement for all these combined shares in this basket constitutes the movement of the index. Complex? Not so much though, but I'll make it very, very simple. So if there are 30 shares that qualify to be in this basket, those 30 shares forms the index. Now it's easy. Now the toughest part is, how do you calculate it? What are the use? Why is index used? What are the type of indexes? What are the criteria that the company should meet to be in that basket? These are very critical. Not many people know about this. We'll discuss all of these right here. Stay tuned. One is the Sensex, the other is Nifty. We all know about this. We all have heard about Sensex. We all have heard about Nifty. But what are these and what do they do? Well, first of all, let's understand what Sensex does. We now know that the Sensex is a bucket of shares which qualified to be in that bucket, to be in the Sensex bucket. Now, when this bucket of shares moves in a particular direction, the entire Sensex moves in that particular direction and in that order. Now this movement, this minute by minute movement, it gives an indication about the market perception of the people who are participating in the market. So what people are thinking about the market, what people are thinking collectively on all these stocks that are in this basket as a combined thought, that combined thought is portrayed via the index, Sensex and Nifty, as we know of. So what are the use of index? The first use is it gives us an information. Information on what? It gives us an information about the general market trend for a certain period of time. It gives us information about the country's current state of economy. It also indicates about what people think of the future prospects of this country, whether they think positive or they are thinking negative. So these are the main three best case uses of the index. It gives these three major information to us. Benchmarking. That's another major use of an index. Benchmarking for what? It benchmarks your investments to the index. It benchmarks your particular stock and its performance to the entire bucket of stocks. It provides as a yardstick for measurement. So just to take an example, if you have purchased a share in company A and that share has gone up by 10%, and say suppose the index has gone up by 20%, then you can say that your share has underperformed the index. On the other hand, if your share has gone up by 20% and the index has gone up by 10%, then your share has outperformed the index. So it acts as a yardstick. It measures your individual portfolio's performance against a standard set of stocks or a basket of stock. Index also helps in trading. Now, how do you trade an index? How do you trade Sensex? How do you trade Nifty? Well, it cannot be done directly. You can do it from the derivative market. So just to give an example, say suppose if the budget for this year is very good, then the public sentiment, the sentiment of the country would say that the market is going to go up. Now, some people who trade on these derivatives, they bank on this overall performance of the index. Now, when the index is expected to go up, certain investors, they trade on this price movement as a whole. Portfolio hedging. It acts as a hedge point for any undue movement of a particular stock. Just like maybe a huge fallout in 2008, 2020, 2022. So scenarios like this, where if you have invested in certain stocks and that has gone down drastically, index would act as a protector. It doesn't go up or it doesn't go down as much as a particular stock might move. So how is the Sensex constructed? Well, to construct the Sensex, it has to meet certain criteria. The companies will have to meet certain criteria to be in that basket, just like we discussed earlier. So we'll find out what are those criteria are. And secondly, once those companies meet certain criteria and they come into that basket, now after the stock gets into the basket, it is given a weightage. The weightage depends on its performance, its goodwill, its a lot of other criteria. So two things are very important for the Sensex or the index construction. One is you have to meet the criteria. The other is once you meet the criteria, you will be given a weightage on the index. You cannot take up the whole index. So we'll see what are those criteria. I'm taking these points from the BSE India website. So it's listed out there. If you go to bseindia.com/markets and do a little research on that site, you will find out the criteria that are required for a stock to be in the index basket. So what are those criteria? The criteria are divided into two different types, qualitative and quantitative. So first we'll see what are the quantitative criteria. So amongst all these shares in the country, so if you find the market capitalization of a particular stock of each and every company and list them in order from highest to lowest, your stock should be in the top 100 in this list. That's criteria number one. Criteria number two, trading frequency. The stock should be traded on every single day, on every single trading day for the last 1 year. So if it's not traded, then you don't qualify to be in the basket. Criteria number three, average daily trades. So if you take the trade volume, the average trades for all the shares that are traded in the market and list them from highest to lowest, if you rank in the top 150 in that list, you qualify to be in the index basket. So average daily trade, it tells us that if you take all the stocks and find out the average daily trades of all the stocks and list them in a descending order from highest to the lowest, and if your stock is in the top 150 in that list, you qualify to be in the index basket. Criteria number four, average daily turnover. Again, you find out the daily turnover for the stock for the last 1 year for all the stocks that are traded in the market, list them in a descending order from the highest to the lowest, and if you come in the top 150 in that list, you qualify to be in the index basket. Criteria number five, industry representation. Are you a self-clearing member or a trading cum clearing member, SCM or TCM? So just to understand in brief, the SCM or the self-clearing member does not have the right for the clearance of other members, where the TCM does. And the last criteria, listing history. The share should be listed in BSE the last 1 year. So if you fulfill all these criteria, these are the quantitative criteria that you have met to be in the index basket. Now let's look at the qualitative criteria. Company's track record. No goof-ups, no mismanagement, goodwill, good name, good brand value, all these things, a healthy business, and basically you can say a star for your country. So if you have that goodwill, if you have that audacity behind you, if you have that goodwill behind you, you do qualify to be in the index basket. So that's the qualitative criteria for your stock. So these are the quantitative and the qualitative criteria that are required to be in the index basket. So what is a free float market capitalization? You need to understand this to understand the index calculation. So free float market capitalization tells us that the more you have a market capitalization, the higher is your weightage in that basket. So what is the market capitalization? Basically, Google and find out the market cap for the companies that are in the index, in the Sensex or the Nifty. It's available in Google. You can just simply pull out, and you can also pull out the constituents of the index and individually go in any of those trading websites like Money Control or Ticker Tape or whatever, and find out the market capitalization for that company. So how frequently is the Sensex calculated? Well, during the market hours, when the market is trading, the Sensex is calculated on every second, on a second basis. Every second, the valuation is updated, the numbers are updated, and the Sensex value gets calculated. So it's calculated on a real-time basis, every second. But when the market ends, then the calculation is taken up in a different spreadsheet to maintain the consistency so that the numbers do not go haywire. So now, how do you calculate the Sensex? First of all, find out those companies that qualify to be in that basket. So once you find out those companies, say maybe it's a 30 company basket, which is the Sensex. So you found out those 30 companies that qualify to be in that basket first. Then find out the free float market capitalization for all these companies. Where do you get this data? You get this data from the BSE website. Then you calculate the free float multiple of all these companies. How do you calculate this? It's free float market cap by full market cap. So if the free float market cap is say 77 and the full market cap is 100, so the free float multiple is 0.77. Okay, round off this value 0.77 to 0.8, or if it's 0.72, round it off to 0.7. So that's how you round off the value for the free float multiple. After you round off this free float multiple, then recalculate the free float market cap of the Sensex basket, of the basket. How do you do this? So take the free float multiple that we have just found out, it's 0.8 in this case, into the full market cap of that share. That's how you get the revised free float market cap of that particular stock. Now add up the free float market cap for all these companies. Okay, find out the free float market cap for all these companies, add them up, you get the total free float market cap for all these companies. And now you have all the data points. You can apply these information or these numbers into the Sensex formula and you will get the Sensex figure. So the Sensex formula is the base year index value divided by the base year market cap into the total free float market cap. So this is the Sensex formula. You can use this, you can put in these numbers and you will get the value of Sensex as on today. This is how you calculate the index. So this is how you calculate the index. So we'll stop here, we'll continue further into different avenues, we'll drill deep into the stock market and we'll try and understand what are the different aspects in the stock market and how do you calculate those numbers and put to use for your benefit to maximize your returns. So stay tuned. Till then, SG signing off. Goodbye.